Is Bitcoin going to see a 40% correction? We've been talking about this for a while now. In today's video, we're going to be looking at these corrective periods in the cycle, talking about their duration, how long they have lasted, and also how this is impacting the current cycle in terms of the historical norms we see in the halving cycle, the traditional one. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So across time, dating back to November 2022, we've seen only a few major corrections. 1, 2, 3, 4, and 5. This is only the 5th major retrace in this cycle. And if you look at previous history dating to the bear market bottom of November 2022, we've seen pullbacks as deep as 23%, 20%, 22%, 22% again here, just shy of that level. And then we had a March 2024 retrace of 18%, and then we had an April 2024 18% pullback, which has turned into a much deeper one. And my reasoning has been that, well, if we're inside a range here going up towards the upside, essentially consolidating between 60k to 70k. So every time we reject from 70k, we reject 18%, rally back there to the range high at 70k, and then reject again 18%. This isn't necessarily, it shouldn't be classified as two 18% retraces. It should be classified as one corrective period here. And this single corrective period is now the deepest corrective period in this cycle to date. It has eclipsed the 23% corrective period that we saw in early 2023. This is now deeper than that. This is getting to even minus 24% territory. So we now know this is the deepest retrace in this cycle. And as I've been talking about on Twitter, in threads on Twitter, really important to emphasize that whenever we'd get close to 20% downside, that was typically a fantastic bargain buying opportunity before price reversals towards the upside. So if we're now deeper than 20%, this is an even better opportunity than we've had in the cycle, because the deeper we go, the closer we get to a bottoming in Bitcoin's price action. So now that we have the deepest corrective period in this cycle, how much more downside could we really have? I don't think it's going to be 40%. It's simply not going to be that deep, but something along the lines of what we've seen in this cycle. This is something we can expect. This is something we're seeing. And so 24%, I think there's not much more downside left to go. So the risk to reward ratio here is definitely favoring the bulls in terms of getting to a bottom quite soon, because we're seeing retrace depth get to the point where it's the deepest correction in the cycle. But in terms of length in these corrective periods, we've seen 21 days, 63 days, 63 days, 14 days pullbacks. This is now a 49-day pullback. From March to now, it's the deepest corrective period in the cycle, but it's also getting to the point of being one of the longest periods in the cycle, just shy of the longest retrace of 63 days. So that's a 2-month retrace. We're really getting there. We're getting quite close. So not only is it the deepest retrace, it's getting slowly very close to becoming one of the longest, if not the longest. You know, we just have to wait less than 2 weeks for us to equal this 2-month corrective period. So we're very close to having one of the deepest and longest corrective periods in the cycle. And typically we tend to see 2 to 3 week pullbacks. But if we get to a longer corrective period of 2 months, it really just showcases that bargain buying opportunity. We have a deep correction, we have a long correction. How much deeper can it be? How much longer can it go on for? We're getting really close to the bottom here, just based on pullbacks in this cycle. However, from the perspective of a traditional halving cycle, it would be great for this corrective period to continue for a little while longer. We've seen that this corrective period is going on for 2 months now, just over 2 months. And what this means is that if we saw a new all-time high in the pre-halving period for the first time ever in early March, and now consolidating here, when we reached that new all-time high, we were 260 days ahead of schedule in terms of the cycle, because typically we tend to break beyond old all-time highs in the post-halving period, as you can see. So that's 200 days after the halving. And the same thing happened also in 2016. You can't see it from this chart, but generally speaking, we tend to break beyond to new all-time highs 200 days after the halving. So the fact that we did this before the halving means that we were 260 days ahead of schedule. But now, because of this range going on for over 2 months, we have cut that rate of acceleration from 260 days to 200 days. And that's really great, because we need a bit more of that mean reversion, that deceleration in the cycle, for us to resynchronize with historical halving cycles, where we could then expect a bull market peak in mid-September to mid-October of 2025. Of course, even if you look at bull market peaks after the halving event itself, we tend to see 518 days after the halving, and here we see 546 days. So there is an acceleration inbuilt in the halving cycles by a month or so. So some sort of acceleration, apologies. I was going to say reaccumulation, but some sort of rate of acceleration is always going to linger and remain in this current cycle. But at the moment, it is 200 days, whereas here it was only 30 days. So we really need to cut that down quite considerably. And the way to do it is to simply consolidate around these current levels between 55k to 70k inside this red region here. And this red region historically has been 150 days long. Across cycles, you can see that it was a little bit shorter back here, but the main gist is that 150 days is where we tend to see a breakout into the parabolic phase. So if we continue to see the sort of consolidating and slight pulling back over the next 150 days, if we're already down to 200 days of acceleration in the cycle and we see sideways movement for 150 days more, then we've cut that down to 50 days then. So if we're seeing inbuilt natural acceleration of 30 days in the traditional halving cycles, and we consolidate here for 150 days, we'd only have 50 days of acceleration. And you could even say that, well, if this is 518 days, then we see 30 days extra here. What if we see 60 days extra? That could be just a natural tendency in the halving cycle. So a 50-day rate of acceleration, which would be remaining after a 150-day consolidation period here, that could be just simple, normal, natural acceleration that just evolves in the traditional halving cycle. So something to keep in mind. This consolidation period isn't all that bad. If you just look at this consolidation period here, it does precede the parabolic phase in the cycle. So I wouldn't be worrying about, this parabolic phase not materializing. I'd be worrying about not dollar cost averaging here and taking advantage of this bargain buying opportunity, the last bargain buying opportunity before we embark on that parabolic phase in the cycle. And so if we really break these phases down into minutiae, and I've been talking about this on Twitter, but I'll briefly cover them here, we tend to see danger zones on each side of the halving. In the pre-halving period, we tend to see a danger zone precede a pre-halving retrace, as we've seen in the past. And after the halving, we have a 3-week window where we tend to see pullbacks to the downside. And so in 2024, we've seen a repeat of 2016, as we'll see in just a moment. But of course, in 2020, things went the opposite way, which is just giving us additional insight that, well, we're seeing very similar price action to 2016, not just in this post-halving danger zone period, but also in the danger zone pre-halving period, where Bitcoin topped out 28 days before the halving, and it was 30 days topping out for the pre-halving retrace in this cycle, and we're in the post-halving danger zone, seeing pulling back within a 3-week window, and lo and behold, of course, in 2016 we also saw that. So this reaccumulation range saw downside wicking below here, and now we're also seeing deviation from this current range here, deviation into 57k, roughly speaking. But this is all about just giving us additional bargain buying opportunities, and it's all about building this reaccumulation range which we're currently seeing right now. So that's about it for the video. Thank you so much for watching, but I just want to mention here, not only just to subscribe to the YouTube channel in general and like this video, of course, as usual, but I've launched a new altcoin in my 10x portfolio. You can check that out in the link in the description down below. That's exclusive to Hall of Fame subscribers, so check it out if you like altcoins. It's the best time to be accumulating Bitcoin and altcoins at this moment in the cycle when things are going to the downside. We want to be buying into the fear because extreme fear precedes financial opportunity. So that's about it. Thank you so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.